students. We have learned the depreciation meaning, methods and the basic journal entry. Now today onwards we are going to do the example. Journal, you know how to do the example. Ledger posting we have learned in the chapter ledger. So your knowledge of journal and ledger will help you in doing the solution for depreciation example. Let us see question number 5. Machine account shows a balance of 60,000 in books of the account of Mehta Limited on 1/4/12. Whatever the line is given, you are supposed to do the posting according to the line. This machine was purchased 5 years back. It means that for 5 years already the depreciation you have given on that machine. After giving depreciation, today the book value of machine is 60,000. Till today, the total depreciation written off on this machine was 20,000. So, 60,000 is the opening balance given today, plus till today the 20,000 depreciation they have already calculated and given. So, original cost if you consider 80,000 become the cost of that machine. Okay. So, 80,000 become the cost. On 1/1/14, second machine was purchased for rupees 12,000 on 1/1/14. We have two machines, machine 1 and machine 2. Machine 1 history we are doing the calculation here. Machine 2 we are going to do the calculation here. So second machine you have purchased at 12,000. The second machine was not found suitable and sold at 10% loss on the book value on 31st/12/14. The second machine you are selling on 31st/12/14 at 10% book value. Whatever conditions are given, we are supposed to follow. Every year, company provide depreciation at 5% as per straight line method. So when the straight line method is said, we need to know the cost. And that what we have done the attempt, that opening balance is given, total depreciation is mentioned, so you have found the cost. Cost 80,000, 5% of 80,000 is equal to 4,000 depreciation per year for M1. Let us see what we are saying is correct or not. They have said that 20,000 they have already depreciated for 5 years. So 20,000 divided by 5 is equal to 4,000 per year. So per annum they have depreciated 4,000. So this figure and this figure both are tally with one another. So we have done the check by method also and we have got the depreciation value for M1 proper. Now let us continue. That on 1/4/12, the 60,000 opening balance instruction given, we have posted. Now for this year, we have to charge depreciation for 5%. 5% don't count of 60. 60 is the book value. SLM says the depreciation to be charged as per the original cost of machine. So we have calculated the original cost of machine, that is what? 80,000. So 5% of 80,000, that what comes to 4,000. So on 1/4/13, book value become 56,000. Again 5% depreciation. So first year, second year depreciation, after that value become 52,000. So third year also we are calculating depreciation 4,000. So now 48,000 remain the balance on 31st March 15 for machine 1. This is what story about machine 1. They have purchased the machine 2, that M2 purchased on 1/1/14. So on 1/1/14, 12,000 is the cost of machine. Our books of account closed on 31st March every year as per the financial year. So you have to give depreciation for the part of time for which you have used the machine. So here from January, February and March, for 3 months depreciation you have to calculate. 5% depreciation of 12,000 is equal to 600, that is for 12 months. For 12 months 600, then for 3 months how much? When you find the equation, you will get the answer 150 rupee is the depreciation for M2 for the financial year first year, that is from 1/4/14 till the 31st March 14. Okay. Then on 1/4/14 the book value of M2 is 11,850. Again charge depreciation. But you are selling this machine, not found good. So you are selling this machine on 31st 12/14. So here the 12 come. For that only the 9-month duration is there. So 9-month depreciation to be calculated. Again, for the 12 month, that 5% means 600. Then for 9 month, how much? Then it become 450. So 450 you have to subtract as a depreciation. So your book value will become on 31st 12/14 when you are selling your machine. The book value is 11,400. Now always on book value we have to calculate profit or loss. If profit is given, we have to add into book value to find the bank amount or cash amount. If loss is given, we have to minus from the book value. So here condition is 10% loss at the book value. So 10% of what? 10% of found book value 11,400. So that 1140 you have subtracted. So the balance is the bank amount or a cash amount. What you are going to get for M2 is 10,260. So this is what we have done the working. Now based on working, we can write the figures in our machine account and in our depreciation account. Let us start with that 1/4/12. 1/4/12, you have two balance brought down of M1. How much is the balance given? 60,000. Clear? In this 12, there is nothing for M2. So you have to simply do the total 60,000. Charge the depreciation for respective year of M1. 60,000. 31st March 13, that is by depreciation at 5% as per straight line method of M1. How much? We have calculated 4,000. So 4,000 to be written. So you are going to get balance by balance carried down amount 56,000. See, once you have done the working properly, it becomes very easy to do your posting. So on 1/4/13, two balance brought down 56,000. Okay, so 56,000. Now on 1/1/14 we have purchased the machine. So after a time we are going to post 1/1/14. That is to bank. The machine is purchased of rupees 12,000. Clear? Now here we have to give the depreciation. So 31st March 14 by depreciation at 5% as per SLM. You are charging for M1 how much? 4,000 rupees. And you are also going to charge for M2, that is 150. Okay, 150 for M2. So total depreciation 4,150 is the figure. Okay. Now we can close the account. So we are going to get the figure, that is 68,000. Right here 68,000. Find the difference. 31st March 14 by balance carried down. So on 31st March 14 your balance going to be Here 52,000 and 11,850. So 2,850. 50 with the balance. Now take on the 1, 4, 14, 2 balance brought down. Your balance is 62,850. Now we have done the posting of this, of this, of this. We have done the posting of this. Now we are giving depreciation. So again, before we give depreciation on 31st March, that is on 31st December 14, we are selling the machine, that is by depreciation for M2. How much depreciation we have to calculate? 450. Okay, 450. Then again on the same day, you have by loss on sale of M2. See, when you have more than one machine, be specific with the figure machine number. Loss on sale of machine, that is 1140. 1140. And then you have the receipt of cash by bank. You can also write cash, whatever, bank or cash, oblique, that is what amount, rupees 10,260. Now, before we close 31st March 15, we have again the entry for depreciation for M1. That is what we have calculated, 4,000 rupees. Don't forget to put this. So in this example, we have charged depreciation for both the machines separately because you have sold the machine during the year itself. So now we have to close the account. So the total going to be, that is 63,850. 63,850. Find the difference. The difference going to be 31st March 15, that is by balance carried down. This balance is of M1, that is what, 48,000 rupees. This balance to be brought forward here as 1415, to balance brought down 48,000 rupees. It means that the machine 2 you have sold, so there is no balance. Machine 1 still you have in stock and the balance is 48,000 remain after depreciation. So this what we have done of the ledger of machine account. Now let us do depreciation account. Depreciation account is a nominal account. Nominal account get closed every year. Machine account is an asset account. Asset account have the balance and that's why we show in the liabilities in the balance sheet on the asset side. Assets and liabilities carry forward. The balances are carry forward. While the nominal account are closed and transferred to P&L account. So when we prepare the depreciation account, we have posting on both the side. Same amount posting will be there and that's why we have no balance left. So the first year depreciation we have charged 4,000. So on 31st March 13, okay, we have to write to machine account. Machine account 4,000 depreciation we have charged. You remember we used to write the journal entry. What the journal entry is? Depreciation account debit to machine account. So depreciation account debit side we are writing to machine account. Then the second journal entry we used to write to close the account, that is on 13 by profit and loss account. Then this depreciation we used to transfer in our journal proper, the closing journal entry. What entry we used to write? the profit and loss account debit to depreciation account credit. So on the depreciation account credit side, 4,000 to be returned. So the first year posting is done for depreciation. Close the account, do the total, it is going to be same. Nothing remain balance, your account is closed. Like this, on the 31st March 14, that is to machine account. Okay, we are giving depreciation for this machine. Two machines were there, M1, M2. So we are giving M1 plus M2. The total depreciation is 4150. Okay, and the same amount we have to transfer by profit and loss account, the same amount 4150. This is for the second year. So again here your machine depreciation account is closed. Clear? Now the third year. Third year we are depreciating again. Here the 450 rupee and here is the 4000 rupees. So 31st March 15, to machine. For M1 we charge on 31st March and plus M2 we have charged it on the day when we have sold the machine. Okay, so that is our December month. So the total depreciation 4,450. Close the account. And on credit side 31st March 15 by P&L account 4,450. Okay. So this manner the total get tally of depreciation account and machine account posting to be done and balance to be carried forward. M1 balance you have, M2 balance is 0 because we have sold the machine. So first you do the working, second you prepare the journal in your mind and then you based on the journals do the ledger posting. You have your knowledge of ledger chapter, recapitulate that will help you how to do the posting. Thank you.